FORA.tv. The world is thinking.
I like to some of these quotes. I look for businesses in which I can predict what they're going to look like in 10 or 15 years' time. Take Wrigley's chewing gum. I don't think the internet is going to change how people chew gum. And in that, a lot of people during the tech bubble were really down on value investors. They were saying 20% annual compound return. Puh. I've got a guy over here, he's giving me 70%, 500% return. Well, Warren believes that predictable products mean predictable profits. What he likes to be able to do is be able to look at a company's history, look at their earnings, have they been consistent, have they been going in a direction, and then he can reasonably predict with a certain amount of certainty what they're going to be doing in the future. And there's a process, a very easy mathematical equation that he uses that really just has addition and subtraction and present value and future value, which we kind of go into in our other books. But if you think about it, a product that doesn't have to change, you can reap all the benefits to spend the money on research. You don't have to spend the money on research development. You don't have to fall victim to the ups and downs of fashion. Think beer, think soda pop, think gum, think Hershey's. The stock market can close tomorrow. As long as there's children, they're going to be eating chocolate. Or in my case, as long as there's me, I'm going to be eating chocolate. And people are going to be drinking Coke, and people are going to be shaving, and people are going to be drinking Evian. And it's about branded products, predictable profits. So, he tends to go with companies like that he knows well. Another quote to kind of follow in that same vein is never buy these on any day that has a Y in it. Well, there isn't a day without a Y in it. And what he's talking about is IPOs, because there's no way that he can predict what's going to happen with an IPO. The short-sightedness, the stock market is a very short-sighted market. I mean, that's what it's really all about. The fact is that people, one of the other quotes, and I'll get right back to this, but it always amazes him that people drive to Wall Street in Rolls Royces to get advice from people who take the subway. If those people who are giving you advice were so smart, why aren't they rich? Because they get their money based on commissions. And so the market is a very short-sighted market. There's billions and hundreds of millions of dollars out there, and hedge funds and mutual funds and so on. But actually, they can't possibly invest for the long term, because at the end of the year, you want to be the number one mutual fund. You want to show your customers the return that you've given them on their investment. So you can't hold a wonderful company when it's mispriced by the stock market because of a war, because of a recession, because of a one-time mistake. But the underlying economics of the company are strong. It can recover, and eventually the stock price will follow that, but that is over the long term. And your stockbroker and the mutual fund managers can't possibly do that because they have to show results year after year. So think long and hard before you make an investment.